Hello and welcome to Retirement Today. My name is Jenna Cairns, founder and financial advisor at Beacon Wealth Advisory, and we're here to help get you to and through retirement with financial peace of mind. If you'd like to listen to this podcast again or check out any of our past podcasts, you can listen to it on Amazon Music, Apple Podcasts, Spotify. We also have a YouTube channel, so if you'd like to view it, you can go out to YouTube, type in Beacon Wealth Advisory and hit subscribe, and you'll be notified every time we have a new video out. If you have questions about anything that you hear on the show today, we'd love to have a complimentary consultation with you at 1-800-994-8993. Again, that's 1-800-994-8993. Well, before we get started, I, of course, want to bring on my gorgeous, beautiful co-host, Jacqueline Gladhill. Thanks for being on the show as always, my friend.
Oh, Jenna, what an introduction. Thank you so much for that. And to our viewers today, the ones that are watching this on YouTube, Jenna, you and I match. And I don't know where the spring energy came from, but the, kind of beigey color and short sleeves, I love it. And spring is here. So it's exciting. And I think one of the main things that sets off spring is Mother's Day.
Yeah.
And we had that this last weekend. And so, Jenna, what did you do for Mother's Day?
Yes. Well, I will tell you, my family really went all out. This is the best Mother's Day that I've had, which was really neat. So I woke up, we ended up going to this really nice Mother's Day brunch in the morning. Then we went to church, came home, I took a walk, took a nap. They did all the laundry, all the cleaning, the getting ready for the week, picking out clothes. I mean, they did it all. And then after that, we went bowling, which I love to bowl. So as a family, we went bowling, which usually gets a little competitive.
Yep. What'd you score?
What did I score? It was not good. I don't think I want to share. I actually did not. I literally was in second to last place. My kids totally showed me up. So anyway, we won't share that. But and then we came home, had a nice dinner, and then as a family we karaoke'd. So we like to karaoke together and sing.
Wow.
And my husband thinks that he is a very good rapper, which is pretty funny. So anyway, we just had such a nice day. I felt so loved and appreciated. So
that is wonderful, Jenna. I mean, you had a full day too. I mean, that's like set from 6 a.m. to 10 p.m. Here you go.
Yes.
But that sounds wonderful. And what a great way to start your week.
Yeah, it really was. My love tank was full. So what did you do for your mom? Did you guys do anything?
Yeah, we just made brunch at home. We have, she's got a lot of dietary restrictions. And so she's like, I would rather eat at home and have you guys just make food for us. And so it was nice. And the weather was beautiful and we just got to be outside. And that's, just spending the day together. But
yes, and you're a good cook, so I bet. What did we make her? Can you share?
We made like pancakes, eggs, bacon. I made like some protein pancakes. That's my new thing, putting protein powder in pancakes.
Yeah.
So good. But
try that.
Yeah, well, Jenna, that is a great way to start this episode. Because I think even talking about Mother's Day and being a parent kind of guides us right into this conversation. And, Jenna, you share about your kids and your help and your, the heart to help your kids. And especially paying for some of the college someday.
Yes.
And that's sad to even think about, but it's the future, right? Hopefully. And so there are some different investment strategies out there that people ask you about. And which one is the best?
Right. Yeah, that's what we'll be talking about. We'll definitely go through all the different options, or actually, I should say the three most popular options that are out there in helping save for your children's future. And I know, Jacqueline, I get this question. I actually have had it recently quite a bit from parents or even grandparents really having the desire to help their children with college. Maybe they went to college and just really believe in higher education. And, sometimes people come in with these spreadsheets and they're trying to figure out, how much do I need to save with the cost of inflation as well? And how much should I put towards saving for my kids' college versus
Mhm.
retirement? And so that is a very common question we get. And I mean, a lot of families are struggling with that right now because college has gotten so expensive. I was reading US News World and Report actually this morning, and the latest national statistics say that a 4-year state college costs about $11,950 a year. So really, you could be paying anywhere from 104,000 to 123,000 right now for like a
Mhm.
4-year in-state school.
Mhm.
But of course, that cost is going to go up, depending on how old the child is when they go. But a 4-year private school is quite a bit more. It's about 46,000 a year, and it can often exceed 220,000. So, I've got 3 kids, and two are in kindergarten, one's in second grade, and you're going, well, do I want to save that much for them for college, or do I want
Mhm.
to help a little bit for college? And what strategies are the best to save in? And
Mhm.
so we're specifically going to compare 3 major college and future planning strategies. There's the 529 plans, of course, the UTMA accounts, and index life insurance cash value actually is a
Mm.
popular strategy that people use. And we're not just talking about numbers. I mean, these decisions are deeply personal. Jacqueline, I know you're going to be a great mom someday, but when you have kids, it's literally like your heart, like walking around
Mhm.
out there. It is just
Mhm.
like the most beautiful kind of love. And I know parents are trying to balance like opportunity, security, flexibility, guilt, fear, and love. And it can be a lot.
Yeah. Yeah, and sometimes, I mean, like you said, all those emotions at the same time, and I think this is also an important conversation for me, I guess, is because I don't wanna age myself, but I'm pretty close to, when I did go to college, and I went to a 4-year private in-state
Hmm.
university,
Hmm.
and my fiancé did not go to college, and he is
Wow.
but so we come from very 2 different perspectives, and
Yeah.
so I love this conversation, Jenna. But when
Yeah.
parents come into the office to talk with you about college planning, what emotion do you really see the most? I mean, we talked about a lot of different ones. Which one do you see most?
Well, I think they really put a lot of pressure on themselves. Parents
Mm,
feel like their child's future sometimes depends on the financial decisions they make right now.
mhm,
And honestly, college costs have become so large that I think people just feel overwhelmed before they even start.
mhm.
Uh, and of course, parents always compare themselves to other parents and, that kind of thing. So I think pressure and just, yeah, feeling overwhelmed. Like, where do I start?
Yeah, absolutely, and especially when, these families are already juggling, the inflation, mortgages,
Hmm.
retirement, childcare, and really just daily life.
Yes, exactly. I had a dad tell me recently, I feel like I'm trying to save for college and actively drowning at the same time. And I think a lot of families quietly relate to that, especially with, like you said, the cost of everything going up so much lately,
Mhm. Yeah, and
especially
what's hard.
gas, right?
Yes, yes. I just spent $100 on a tank. That I made sure to take a picture of that one, let me put that
I
way.
know, I know.
Um,
Yeah.
but I mean, Jenna, it's hard to what's hard too is that, parents compare themselves constantly, like you said.
Yeah.
And, one family has grandparents maybe helping, and another family maybe has trust funds, or another family can fully fund private school tuition. But then there's some parents and families that feel like they're failing because they can't do all that.
Yeah, and they're really not. The goal isn't perfection. The goal is creating options. And I'll tell you, Jacqueline, I personally had to pay for all of my own college, and I went to a
Mhm.
private school. And I remember sitting in class next to a really good friend of mine that was a trust fund baby. And it was just interesting. I think because I had to pay for it myself and was working at night to like pay
Mhm.
for my college education because I didn't have help financially with it. I hate to say it, took it more seriously, right? Because I didn't want to have to pay for the class again. And I
Mhm.
even did the math in my head, like how much each class cost, if you missed.
Yes.
And
Yes.
she would, because her college was paid for, she'd be out partying and having a good time, skip class, didn't really care if she failed a class or not. And it
Mhm.
took her, a long time to graduate because I don't think she really had any skin in the game. So
Yeah.
I don't think parents should feel guilty if they don't pay for all of their kids' college, because sometimes it's healthy for the kids to have to pay for at least some of it so that, like I said, they have some skin in the game and they
Yeah.
actually want to follow through on that, right?
Yes, absolutely. And I can also relate with that, Jenna, because I had to pay for my own school and I also went to private school. And I think
Wow.
at private school, there are a lot of students that do get it typically paid for.
Yes, I
And,
agree.
I lived in a house with four other girls, and all 4 of the girls never had jobs. And I was,
Right.
working, and they were
Right.
getting groceries delivered by their
Yeah,
parents, and it's like
I know.
there's 2, it's completely different,
Worlds.
and
Yeah.
yeah, absolutely. But
Yeah.
so let's just start with the most common strategy, and that's the 529 plan. I know this one is pretty common and, people kind of hear about it. So what exactly is it, Jenna?
Yeah, I really like the 529 plans, especially because I'm big on tax planning strategies. And a
Mhm.
529 plan is a tax advantage investment account specifically designed for education. It grows tax deferred and withdrawals are tax free. Jacqueline, we like that word, tax free,
Mhm.
when used for qualified education expenses. So for many families, it really is one of the best available tools for college planning.
Mhm. Yeah, absolutely. Well, can you tell us maybe a little story about, using a 529 plan?
Yeah, yeah. Well, I worked with a family, and we'll call them the Martinez family for privacy reasons. And their daughter, Sophia, was an incredible student, first generation college bound. Her dream was attending a private university she had wanted since middle school.
Wow.
And when the acceptance letter arrived, the whole family was so overjoyed. I mean, they
Mm.
cried, they just celebrated. But then came the tuition number. And I think people are often surprised by all the costs that come along with college. So even after scholarships, they still face tens of thousands of dollars per year. The
Mhm.
beautiful thing was this: when Sophia was born, Elena had quietly started contributing small amounts into a 529 plan every month. Sometimes $50, sometimes $100, sometimes almost nothing during hard years.
Mhm.
But over nearly 2 decades, those investments really compounded significantly. And Elena told me every contribution felt like buying a tiny piece of her future. And she was very aggressive with those funds. She put it in stocks and really tried to grow the money. And it was beautiful that she was able to do that.
No kidding. I mean, that's really emotional, but it's also brings up the idea that we talk a lot about on the show about, just starting somewhere and doing what you
Yeah.
can because, make the money work for you.
Yes, yes, and I like that she did it monthly because then you can kind of dollar cost average into the market and buy
Mhm.
stocks at different prices. So the 529 didn't cover everything, but it did dramatically reduce the amount of loans that she would have coming out of college. And it just
Mhm.
gave the family some breathing room. And honestly, that's what many parents just want and
Yeah.
misunderstand. Again, you don't necessarily need to save 100% of those college costs to make a massive impact on your children's lives,
Yeah, no
right?
kidding. Absolutely. Well, Jenna, maybe let's go through some pros and cons to help explain what the 529 is and how it's used.
Yes. Well, the strength of the 529 plan is definitely strong tax advantages. I would say that's the
Mhm.
biggest benefit. There is long term growth potential. The parents control the money and education focused discipline. And now the government recently changed the rules where you have the ability to roll into a Roth IRA if it's not used for college to
Mm.
continue that growth tax free, which you then would earmark for retirement.
Mhm.
But there are limitations to trade off for everything, right? Like we always talk about. The money is designed primarily for qualified education expenses. So if the
Mhm.
funds are used improperly, there can be taxes and penalties on earnings. So it really does have to be used for college.
Mhm.
But if you're interested in tax advantages, it's definitely one of the best approaches.
Yeah. Well, and I feel like that's a little bit worrisome now because more people are not going to college. I mean, I think
Yeah,
about like my fiance, he did
yep,
not. And he did have a 529 plan set up for him, which
that's
he couldn't
right.
use anything. And
Right.
so it's really powerful when used right, but somewhat specialized.
It is, yes, and like you said, not every kid goes to college anymore, and many people are not, just because
Yeah.
of the cost of it all, right? The
Yes.
government's gonna have to do something to step in and help out a bit with all these student loans. I know they started that Trump account where, if
Mhm.
somebody was born January 1st of 2025 to, I believe, 2028, they'll open up a $1,000 account for
Uh-huh.
education savings, but when they take it out, it's not tax free like a 529 plan,
Mhm.
and you can only contribute like 5,000 a year. But it is something. I think the government will come in and make some changes, but I don't think they'll penalize people that have saved in a 529 plan or anything. And that brings us to the next option, which is an UTMA account, and
Okay.
people hear about this less often. I don't know if you've heard of this at all, Jacqueline, but
No.
it stands for Uniform Transfers to Minors Act account, and we do UTMA accounts for a lot of our clients. So, unlike a 529, an UTMA is not restricted so much to just educational expenses. So, it's perfect for someone like your husband who has maybe not a traditional job where you would need to go to college for it. So the money
Mhm.
belongs to the child eventually too once they get to be an adult. And it can be covered really for anything: education, housing, business
Oh.
opportunities, investing, or even other life goals. And I had a client named David whose son Ethan was very different from the traditional college path. At
Mhm.
15 years old, Ethan was already building websites and freelancing online, very
Wow.
entrepreneurial spirit. And David said something that stuck with me. I'm not trying to raise a perfect college applicant. I'm trying to raise an independent adult.
Mhm.
So instead of putting every dollar into a 529, they also funded an UTMA account. And years later, Ethan did attend college, but he also used part of the UTMA funds to launch a small digital marketing company while still in school. And I'll never forget David getting very emotional in my office saying, the business became his confidence. It really changed how he saw himself. And
Yes.
it was beautiful for him, after graduation to just give that as a gift to him and kind of
Mhm.
almost surprise him with the fact
Yeah.
that, hey, we believe in you. We know that you have always wanted to have a business. And so we've been saving for you. And it was really neat because they kind of surprised him after he graduated from college with that, which I thought was really a neat gift because it is in
Yes.
his name now when he's an adult. So
Yeah.
that's pretty
I
neat.
mean, that's huge, and just like you said, I mean, people who start young and take those chances and, that they can be really successful because not every kid's future, follows one identical script anymore, and not every
Yeah.
kid's future follows college path.
Exactly. Yeah. So the benefits of the UTMA, again, a lot more flexibility than the 529 plan, really broad investment options. So you have a lot more investment options too with the 520,
Mhm.
or I'm sorry, with the UTMA account, which then could possibly create better growth potential and just more freedom for the child's future goals.
Mhm.
But there are trade offs. You don't get the tax benefits like you do in the 529,
Mm.
and the child legally gains control of the account once they reach adulthood. And so that could work for some kids and not for
Mhm.
others, right?
Yeah, yeah, and I mean, 18 is adulthood, right?
Right, right.
That's a little
Yep.
scary to think about,
Yes.
so it
Yep.
can it can either be beautiful or a little terrifying.
Yes, exactly. I had a parent joke and say, "So my son could buy a jet ski technically then with this UTMA account," and technically yes. But UTMA's another trade-off. They can also impact financial aid more heavily than certain other planning
Mm.
tools. So families need to think carefully about, the maturity, responsibility, and long-term goals of their child and whether or not they think they're going to need some financial aid. So,
Yeah. Yeah. Well, I'm glad to see, you explaining that one. Now, I think that kind of leads into life insurance because I think a lot of
yes.
people, talk about it and it's a strategy that confuses people the most.
Yeah.
Especially the index life insurance cash value.
Yes. And I know I've said this in the past on different shows, but if you can get over the word life insurance and just not turn off the show right now,
Mhm.
actually can have some very big benefits to college planning. Certain permanent life insurance policies can build cash value over time. So we're not talking about the term policies that run out
Mhm.
after 10 or 20 years. We're talking about like universal life insurance policies that build up cash value. And the cash value may potentially be accessed later through loans or withdrawals for things like college, business opportunities, retirement, or emergencies. But it is important to understand that life insurance is primarily used as a protection tool first. It's not like you should compare, well, how would my money grow in this cash value versus the market? Because some of the money you're putting into the life insurance policy is funding the insurance portion of it.
Mhm.
So it's not just an investment account. But I did work with a couple where this worked very well. We'll call them the Thompson family. They owned a successful business but had highly unpredictable income. They made way too much money to add into a Roth IRA, which, grows tax free.
Mhm.
And Daniel carried a deep fear after losing her father unexpectedly when she was young. And her biggest concern wasn't just paying for college, it was what happens to our kids if something happens to us. So for them, permanent index life insurance solved multiple emotional and financial concerns. It gave them the family protection of a death benefit, a tax-free death benefit that would go to the family if they died, long-term savings in the form of that cash value, and future flexibility. So over time, the policy really did accumulate meaningful cash value, and if taken out as a loan, was considered tax-free. Years later, part of that accessible value helped their daughter attend graduate school. But it wasn't really the numbers so much. It was Danielle. I mean, I remember her crying during a meeting saying, for the first time, I feel like our children would still have stability, even if life went wrong, even if what happened in my family happened.
Mhm.
And that just gave her
Wow.
so much peace of mind. It really, that family protection was very important to her as well.
Yeah, wow. I mean, what you're saying, Jenna, is it's not about the returns anymore. It's truly just about the security.
Yes, yes, feeling protected if something happened like it did in her family. She knew what that
Mhm.
was like to have someone pass away all of a sudden and, have a major financial change growing up,
Yeah.
right?
Yeah. Well, let's explain the pros and cons of life insurance then.
Yeah. Well, again, it gives a very nice tax-free death benefit, which can leave a legacy. So it has
Mhm.
that protection if you pass away too soon. It does have flexible future access, possible tax advantages like a Roth IRA when you're withdrawing it tax-free, but it doesn't have the income limitations like a Roth IRA, and long-term wealth transfer planning. The drawbacks, the trade offs are you do have to understand that everything you're putting into it is not going to the cash value. It also goes to the cost of the insurance. Sometimes people feel like it can be a little complex, but if you have someone that knows about it, they can simplify it. There's slower growth in the earlier years because that money is going more towards the protection side in the earlier years. And you
Mm.
really have to be committed to paying the premium long term. You have to
Mhm.
be like, hey, I can pay this every year or the policy will lapse. So it's
Mhm.
not usually the best strategy for every family, but I have seen it work really well for higher income households that can't add into a Roth IRA, for example,
Mhm.
business owners or families that are already maxing out the 529 and the traditional savings options, and they just want another bucket to
Mhm.
save in. So it can really be a neat strategy to consider for some folks.
Yeah, yeah, and it sounds I'm so glad that you really compared, the pros and the cons because I think each bucket is different. Each
It is.
strategy is different. And so I want to kind of simplify all three strategies together and how would you describe them, comparing them?
Yeah. Yeah. Thank you, Jacqueline. Well, if you're a person watching today and you have education as a priority, but you also want the strongest tax advantages possible, like if tax planning is really key to
Mhm.
you, then a 529 plan would definitely be a great fit. If you are someone listening that wants flexibility, maybe you're not sure that your child will take the traditional college path and may have other desires, and you want to be able to have more investment options than the 529, then the UTMA account could be a great option to consider.
Mhm.
And then if you're someone viewing and you say, I want long term protection, flexibility, and legacy planning is really on your heart alongside future funding for college or other options, then the index life insurance cash value strategy could be a great option for you to look at.
Yeah.
So,
And I just want to remind our listeners and viewers that, you don't necessarily have to choose only one, right?
right, right. For some of my families, we combine strategies because real
Mhm.
life is layered. And so it's very common that many of our clients have a 529 plan and we earmark that, let's say, for tuition.
Mhm.
Then we also start an UTMA for broader opportunities, like if they want to surprise them after college graduation, like that one family of mine, and say, hey,
Mhm.
here's a down payment on your house, or you
Mhm.
can use this to start your business, just more broader opportunities. And then the insurance planning, we often layer that one on too, just for more protection and long term stability and legacy planning. So
Mhm.
often we do even all three just to
Mhm.
have some diversification for college planning.
Yeah, and they're completely different strategies, right? And so
Yeah,
how it fits into your own individual plan and what fits for maybe your risk level or how you
right.
feel about it.
Yes.
But Jenna, what stands out to me most about the three stories and, you know, all these stories that you're talking about, parents aren't just investing money. I mean, this is a real conversation for their kids, and they're
Mhm.
investing hope and showing that their children, how much they believe in them and their future.
Yes, absolutely. And that's why every contribution, whether it's $20, $200, $2,000, or much more, it
Mhm.
does represent love and sacrifice and just belief in your child and their future. And
Mhm.
parents need to hear this. Your child does not need a perfect financial plan. They
Mhm.
need support, they need guidance, they need stability, and they need parents who are also financially secure themselves too. And
Mhm.
so this is a common thing that I see. I mean, some people have so much love in their heart for their children that they would just sacrifice anything for them to be happy. And they have a very child-centered,
Mhm.
you know, marriage or family
Yeah.
situation. And it's just very important to have balance with that. Please do not just go way overboard with college planning and destroy your own retirement future trying to create theirs. I've seen that
Mhm.
happen. There really is a balance you can find with your financial advisor that can help you find a great tool to save for your children's future while still making sure that you are secure for retirement as well.
Mhm.
It's you just have to find that balance, and that's where having someone give you some guidance can really help, right?
Yeah, yeah, I mean, even that's extremely powerful, but when you even talk about, like, doing your own and your kids, I mean, a Roth account, do you have 2 different ones? Do and how does that work? There's just you're balancing kind of in the middle, and
Mhm.
it's so important to put yourself first too,
Yeah.
because
Yeah.
having kids, you don't often do that.
Yeah, and you think about even when you're on an airplane, and they're telling you
Mhm.
like, "Hey, here's where the oxygen mask is. Make sure you put this on yourself first
Before helping
before helping your kid." It's kind of like that same analogy. I mean, you can't really help your kids if you're
Yes.
not okay,
Yes.
right? And so there is that balance. But I have unfortunately seen people like drain retirement accounts even to help their kids with college. And then they end up
Oh,
in retirement going, gosh, I got to work till I can't work anymore now,
yeah.
And it's
And
just
just
sad. I think there is that balance there, right?
correct. And just a reminder to our listeners and viewers, your child is starting and you are finishing, right? And so they have more time to make up for it. And not saying that's right for everybody, but they have more time and their whole life ahead of them and
Right.
you don't. So put
Exactly.
that into consideration.
That's so powerful. Yes. And remember, there's no single correct path, like you said earlier, Jacqueline,
Mhm.
anymore. I mean, some people to reduce costs are doing community college, scholarships,
Mhm.
entrepreneurship, transfers, trade schools, graduate school. Success is different for everyone. It's not just one straight line. Everyone's path is different in life. So it's important to know your college planning options and really get a good sense for your child, which one of those options may be best for them, right?
Yeah. Yeah. Well, Jenna, we are gearing the towards the end of our episode here. And Jenna, if people are listening and they really, have it on their heart to want to help their child or grandchild, save for money, how would they get a hold of you to schedule a complimentary consultation?
Yes. Well, we would love to help simplify those options and figure out which strategies would be best. 1-800-994-8993. Again, that's 1-800-994-8993.
Well, perfect. Thank you, Jenna. Thank you for a great episode. And that does it for this episode of Retirement Today with our host, Jenna Cairns.